Hello, folks. Brandon Chapman with you today. It's another edition of the TheoTRADE Monday video. Boy, we got a lot going on today with regards to the market. It doesn't look like a lot when you actually consider the amount of movement, but man, when you start to see the percentage movements of stocks like GameStop, which exploded higher today, we're going to talk a bit about how to identify potential opportunities like this in this kind of market, which is relatively significant, given the fact that hey, we got some big data coming up this week that could potentially send the market reeling. But in the near term, if it does not, we may see a lot of more moves, just like GameStop today, like Novavax is another stock, Groupon up 16%. Again, we're trying to help kind of identify and explain moves just like these and how to find the next one. So let's get back to the S&P 500. So why are we drifting today? Well, again, what led the market rally? It was all about the Fed. It was all about Powell basically saying the next step is probably cutting rather than raising rates. It seemed like they felt like they had made progress on inflation. And we do have some significant data points with regards to inflation this week. For example, tomorrow morning, we've got PPI, both core and the headline number. Well, guess what? Look at the numbers here, right? Last month, 0.2. This month, expected 0.2. PPI month over month, strip out food, including food and energy, expected to increase. There's a chance that we actually miss here, miss in a good way, meaning lower inflation numbers. Well, guess what? Why is that? Well, it's not hard to see, right? Let's take a look at, for example, forward/CL. Where are we today versus a month ago? Well, oil prices are lower, right? If we look at, for example, RBOB gasoline, okay, prices doesn't necessarily perfectly reflect pump prices, but the fact is gasoline prices in the month of April are down. So it certainly makes sense that the headline number could potentially come out a little bit weaker than expected. Housing costs, et cetera. There's a chance that this number or CPI on Wednesday may come out a little bit softer than expected. And so as a function, how much of that's being priced in? A lot of it's being talked about. But when you think about this kind of data, it gets priced into the market. And it's possible we may have already seen the rally on that data and that we may buy the rumor as we've done over the last week or two and possibly sell the news on the actual CPI announcement or PPI announcements. PPI more represents inflation in the pipeline. CPI, what's out there, consumer price index. Well, as we look at this again, the road again is not necessarily going to be easy for the market. As you look at the broader economic circumstances, things aren't trending in a great way. Tyson's, for example, gave a warning, for example, stock beat on its earnings, but declined. Talk about this, the consumer being tapped. Starbucks, another consumer-oriented company. And yet all of a sudden you look at stocks like XRT or funds like XRT exploding higher today, but fading from our high. Again, the contributor a lot in this mix is what we're talking about, high short interest stocks. And so we have to understand is that there is a positive feedback loop that can exist in certain companies. Interest. What happens is they've already sold the stock and they've got to buy the stock back to close out their trade. And what happens when you have a significant amount of short interest, both in the percentage of the float, but also in the number of days to cover or short ratio, this can create explosive environments like we saw today in GameStop, which was halted a couple of times today. Well, guess what? If you go back to, for example, the end of April, at the lows down here, and even seeing a little pop up on May 2nd, and also in GameStop, there was a lot of call option buying back here. Well, why would you buy calls on GameStop? GameStop, it looks like a dog stock for the most part. I mean, it's down tremendously. And all of a sudden you see all this option activity on the call side begin to pick up. Yes, the stock did rally from 10 to about 12. That's a decent size move. But again, it's a $10 stock that's really down from 20 or 27. I mean, just go back to the past and see the massive moves this stock has experienced at times. like for example 2020 when it went from basically less than a buck rallying up to 120. GameStop was on my list for potential short squeeze all the way back in March and April. I thought we might see more traction a la Carvana. Carvana saw this rally in 2020, and there's a lot of stocks that around this point in time saw significant upside movement. GameStop, for the most part, was delayed, and yet it had more ops, had more open interest. Had more short interest than any other stock out there. And it just delayed, and it began to finally pick up. And when did it pick up? Well, it picked up right in here. And there was a coincidence that also happened. And you could see it at every one of these turns when the price surged. You saw unusual option activity. What happens? You see calls being bought in large quantities. That's the unusual, right? Unusual, I mean, you have large prints, oftentimes in one print, buying thousands of contracts. These aren't the apes of Wall Street. These aren't these aren't small traders. These are large institutional traders who are buying thousands of contracts to hedge their position possibly or speculate to the upside. But every one of these moves, if you go back at that point in time, significant call option activity at the lows before we started to see the explosion. And this is what we're talking about here, right? We're talking about the fact that, look, option activity oftentimes helps spur on the bigger moves in many of these stocks, just like GameStop. And how does this happen? Well, when you buy calls, let's say, for example, an institution goes in there, or someone that has a large short position hedges through buying calls. It gives them the right to buy the stock. Well, when that happens, well, guess what? They buy calls. Well, there's not that many people that can be matched up with and sell calls. So guess who sells calls? The market maker has to sell calls. So voila, what we have is the positive feedback loop, the gamma squeeze that turns into a short squeeze. Once the shorts get squeezed, they start to cover, and we transition from a gamma squeeze, right? Because of this, we transform into a short squeeze, right? And that's what helps kind of starts the rally and then finishes it. And today, let's take a look at what we're seeing in terms of volume. Let me change. Well, I guess this week would be fine too. But today we're seeing what? About 178 million shares traded today in GameStop. Now, this is reaching levels. You might say this is maybe towards the end of the move. We backed off our highs and closed at 30. But when you look at the float on GME, so let's bring up Yahoo Finance here. So we go over here to Yahoo. Let's bring up GameStop. Where you start to reach dangerous territories when you start to have a single float turnover. And we're not too far off of that today, but you'll see the float right here is 267.9 million shares. We traded about 100 million shares short of that. But again, watch that. If we start to get north of that number, the float is the shares outstanding minus like restricted shares. There's not a lot in there. So we're left with 267.9 million shares that can be traded at any given time, right? The number of shares short are 64 million, which is significant. It represents 27% of the float. And this helps the short squeeze, right? You look at that, finally came down to a level where all of a sudden you look at average volume, 7 million for the last 3 months, 10 days, 21 million. And you see that number there, 64 million shares short. It's going to take, based on what? An average volume day, 15 days to cover. And so again, the combination of high short interest and high short ratio, the days it takes to cover, this adds the potential volatility that we're seeing in the off to a point where all of a sudden, if the shorts begin to cover, it could create massive, massive moves. And that was an understanding. I think it was lost on many. If you go back if you go back to 2020, is that yeah, you can talk about the very high degree of short interest, but when you start talking about 2 billion shares traded in the week of January 25th, you have to just realize the shorts can cover their entire inventory, right, of short shares with 2 billion shares traded. And so it's these blow off points where the volume accelerates, and all of a sudden the short squeeze dissipates because there's enough volume that the shorts can easily cover and exit as the volume reaches that kind of heightened state. We're not exactly there yet, but yet last week we had about 159 million shares traded. So far today, 178 million. But again, you start to see a single float turnover day. You got to know that, hey, we're probably towards the end of this rally, or at least you may want to take profits. If you have a long option or spread, you may want to roll that out of the money. And that's when we talk about GameStop and other stocks like this, is that, again, the high short interest leads to what? Hedging, right? And those calls that are being bought may be hedges, they may be speculative trades. What we're seeing here is that if you are trying to trade options, okay, and this is an important thing, is that options allow you to trade with defined risk. It's really hard to go out there and buy calls at 211% implied volatility. I mean, that's crazy, right? Just to go out there and buy a straight call. Good chance you're going to lose in that regard. But look at this. The call option buying does create an environment where a volatility is rising as you move out of the money. And we'll notice a little bit of a dip here. We're at about 39 days out here. It was a little bit better earlier in the day, but 33, 34, you can buy a 33 strike, sell a 34, buy the 227 and sell the 232. Buy the 227 and sell the 37. It's a 4-point spread to 37, but you're buying the lower implied volatility, selling the higher. And the fact, if you construct a spread, buying the lower vol, selling the higher vol, well, guess what? You've negated the very astronomical implied volatility in GameStop here. Now, GameStop could be toast, right? This may have been the blow-off event, and now we're looking for the next domino to fall. But this is a way to do it with very defined risk. It costs you about $1.10 on a $4 spread. Okay, many people can risk $1.10, $110 more than they can close to $1,000 to go out there and buy the 33. That's why people are shooting even out there at the 40 strike. Is costing about $745 at the mid, or $745. So constructing spreads, basically trying to take advantage of the positive or rising volatility structure can help. You can go lesser amount of time, and oftentimes this will be more accentuated. Again, buy a 32, sell a 34, right? 32 is what? It's just slightly out of the money. After hours, it might be slightly in the money. Look up here, the bid ask and the extended hours trading has moved higher. You could buy a 32 tomorrow, sell a 34 potentially. We may have outrun kind of our strike selection or outrun the coverage. But again, you can see buy the 306, sell the 325% implied volatility. And you can see that cost you about 50 cents on a $2 spread. So this is a consideration of how to play these kinds of trades when they exhibit high short interest. Again, a lot of option activity and positive skew. What that means is volatility is rising on the calls as you move out of the money. It allows you to look at placing long call vertical trades, which are very limited risk, right? And have significant upside potential. And maybe you're not going to make 1,200% plus. I did a scan today using some of the stuff here. And again, you look at some of the biggest moves, XRTs in here, but VF core, AMC, Tupperware, AMC, MPW, XRT. So this is an unusual option activity scan they have. You can see right here, BlackBerry, significant. I mean, these options are up like 1,000 or hundreds of percent or thousands of percent. Why? Because they're breaking out today. They're getting squeezed, right? So this isn't going to bring up everyone out there, but you can see it, all these names out here. And again, you can take these symbols and start to construct trades around them using a scan like this. And this doesn't bring up everything, but this is certainly one. And you can modify the scan in Thinkorswim to be able to find candidates like this. One I'm going to show here is PBI. This is Pitney Bowes, right? It's obviously a huge deal. I mean, you look at my short interest over here. It's not on this one as well. This is a short interest watch that I created in February for moments like this. In fact, on Friday, we spent some time during my session talking about the next trade to watch as the short squeeze. And man, it starts to hit today. It started kind of trickle in last week with GameStop, but it just exploded in the last couple of sessions here, especially today with the big moves. And it's just reflective of the powder keg that gamma squeezes can create and short squeeze combined can create significant movement. But if we look at Pitney Bowes, we've seen some degree of movement already. We got a big breakout a little over a week ago. We pulled back for last week, and today we're starting to see a bounce. That breakout occurred on earnings. That's why you're seeing significant volume. The earnings were negative. They actually beat estimates by a small amount. But again, we're seeing this long congestion area here. Long congestion here broke out, went sideways for a while, breaking out again. You start to look at this and thinking, hey, is this the possibility this could break out again? We think about GameStop, right? And the conditions that were represented there. Is this different? Well, in one respect, it is. Its degree of short interest isn't as high. But look at the statistics down here. About 9.5% are shorted, but the short ratio is profound at almost 10. A short ratio of greater than 5 would be a significant short squeeze candidate. Sometimes you just have maybe 20% here, and that's about 2 or 3. You still might consider that a decent short squeeze candidate. So we've gotten the boost. Again, about 6 million shares traded. The float's significantly greater than that. We're pulling back, and today we're seeing a bid under at about 3.36%. There was option activity last week. I didn't really talk in my sessions. I really talked about it today, given kind of this flag breakout that we're seeing here. Volume wasn't profound. It was about average here. But again, we could see another move very similar to this, right? And so we look at PBI. And again, you don't know when these are necessarily going to hit. But again, this stock does not normally trade a lot of volume. But today it did, right? So we go to June expiration here. You'll see 4,000 contracts traded. Again, we can look down at today's options, time and sales, sort by quantity, and you kind of see when these kind of came in here, but all this on the 5 looks like between the market. But when you look at intraday today, the impact on the price, again, you can pretty readily conclude this is long call activity. And again, the volatility structure is a little bit mixed up here, but again, at 557, you buy the 36%. Well, guess what? Nothing to really sell out here because it's too far away. It's too low. It's too low in terms of volume and too low of price. But you could buy a 550 out here for about 25 cents at the ask. And yeah, this widens out here a little bit, but there is thousands right here. So every 50-cent move in the stock, you can roll it out, right? So if we get a move from current price of 525 to 575, this replaces this. Well, this option goes from 25 cents to 55 cents. Sell it and buy the $6 at that point, right? Every 50-cent move, roll it and book those profits. And again, assuming the stock goes higher. But this is just one of those names, like a group on here, right? Big breakout on Friday, making a move today. There was option activity back here as well. Novavax, again, another stock, huge breakout in its earnings. There was option activity leading in here as well. Beyond Meat, again, this is another one, not today, but previously, some call activity. Again, the earnings kind of dipped. We're rallying today. If we start to break out, could create a short squeeze, could readily go to 12. But let's look at another one here, Restoration Hardware, RH. Well, Restoration Hardware, again, let's look at the option activity on this. This is a May expiration in here. And scroll it out here, right? This is out here at a 322.50 and 335. It's call spread being bought. It's way the heck out of the money there, right? Well, what's coming up that could generate it? Earnings? Well, that earnings is on the 23rd of May. It's not even there. But somebody's placing a trade way out of the money here, suggesting what? We may see a squeeze in the price ahead of that. 535 is only about right here. That's not necessarily a massive move because this stock carries significant volatility and very high short interest. So again, these kinds of trades are one way to capitalize on, again, looking at the implied volatility, buying 70% vol, selling 82%. You negate the high volatility by constructing a spread. And the great thing is you can do this a lot of places along the curve. All this is pretty flattish in here. You'll notice they took advantage of this positive skew way the heck out there in case what? It's a lottery ticket type trade, right? You buy a $1.40, sell 65. It's a very low cost on a 12.50 spread. So again, very little risk, high reward. And this is one of those things is that you probably want to set these up further out of the money, capitalizing on a very, very low risk trade, but big potential. If we get just a modicum of some breakouts, similar we saw back here after its earnings or other points, shortly after the earnings here, we saw the squeeze back here in June as well. BBAI is another one today, right? And again, there's probably more out there. You're probably going to find, I'm not probably going to find every single one out there, but again, here we got Big Bear. Big Bear today. You look at the trade, it's a May expiration here, very short dated, buying the 150s. It's a very low dollar stock. You can go out here, buy more time if you want. Buy 39 days out, buy the $1.50 a quarter. Well, guess what? Again, could you construct a spread? Probably not. This is a low price enough stock. You'd probably just buy the call, risk the $25. But again, what strike is that? That's the $1.50 going for 25 cents at the ask. And again, where's your break even? $1.75, right? Where could this go? You see, it went back here, went from about the same level, ran up to $5. Shoot, you don't even need to go that far. But if you did, it went up to $4.50, $5. You need plenty of opportunities to roll in here. Again, if he doubles in value, just roll it out to the next 50-cent increment. Doubles in value, roll it to the next 50 cents. So basically going for let's look at MPW. This one's kind of crazy. This is a REIT, medical properties. This is one we've talked about bearishly for a long time. Today, there was call trades and put trades on both sides of the market. The earnings came out the other day. And here's an interesting thing, right? Look at the short interest on this particular stock. It's profound again, right? So switching here. Let me try it again. Let's try it. I'll come down here and click on it. Command click's not working. There we go. Finally came up. All right, here we go. So MPW. Again, doesn't mean it's going to. This isn't a for sure thing, but you're just trying to create a list right here. Look here, 51% short interest, 15 days on the short ratio. This is significant. About again, 51% of the float. This says 222 million. It's less than 50% there. But again, either scenario, we're talking about a significant amount of short interest on MPW that is short. And again, it's one you have to consider. Today, we're starting to see that squeeze, but this could move big time, right? This could double in price. It could go more than that. And again, today's trade, unusual option activity in MPW. 24 May expiration here, buying these out of the money calls at the $5 strike price, among others here, right? Sorry, $5.50. Yeah. So we got long call activity. So again, you start to see the calls being bought. That helps predominant fall on the gamma side, leads to a short squeeze. Again, we may have more out of this again, albeit this is a stock that kind of a dog, right? Dog meaning DOG, not a great candidate, but we're talking about something that's very intrinsic to the stock, right? A short squeeze. BlackBerry, for example, BlackBerry, number of bullish trades today in BlackBerry. Again, you can find a lot of these out there, but piling in here on the call side, again, the 350, the 4 strike, 24 May in here as well, 350s. So there's a lot of call options being bought in BlackBerry. And again, we may be just on the cusp of a bigger breakout here. So you can kind of spread it around, right? These are very low risk trades, very small dollar trades. Spread around, you just hit on a couple of them. It could potentially really pay off for you. Well, this is our last one we'll talk about is FYBR, another high short interest trade stock. Broke out its earnings. We're kind of testing resistance here. This is a September expiration. Now, this is out there a ways. Not as much gamma potential. This is more of an example of money flow coming into it, but not as much gamma potential. But this is a September expiration at the 35 strike. And again, this is way out of the money out here at 35. Again, you could look at something a little closer in time, closer between the strike prices. There's not a lot of liquidity in here. So again, it's a bit of a gamble with some of these names. But again, you can see that these stocks, again, follow suit with many of these other high short interest names. And again, how do you find these stocks? Again, you could go to stocks, you go to websites like highshortinterest.com or even something like Finviz. You could create a search like this, for example, that floats short over 10%. Look for mid cap names, price over $10. Very, very easy, right? And this gives you 109 stocks with which you can follow. Again, you can raise the volume. You can do other things to mitigate some of the let's go over 2 million to reduce the number of returns here. This gets you down to 64 Arbor Realty Trust. That's been an area we've talked about barely, but again, high short interest, right? A lot of AI stocks in here. We've got and coal stocks. Again, very easy to construct a list of companies. Again, should produce a lot of movement, a la just the short interest stock I created back here in February, kind of kept a little bit smaller. Carvana already broke out, right? Some of these have already made their moves. Some of them are on deck maybe to make moves. Construct scans to help identify unusual option activity like we're seeing here. And again, Tupperware is another one. Saw some significant option activity today, seeing a breakout. So again, just to give you a heads up, this is how you find these opportunities. Just look for the next domino in this process and keying off unusual option activity to help precipitate that. So this is something I go over every day at TheoTRADE in my sessions, unusual option activity. And I look for moments like this, opportunities where we specifically look at high short interest stocks with high short interest. And that's the way we kind of identify plays like this. Anyway, have a great one. We'll see you back next week. Thank you.